Good afternoon and welcome to the CleanTech Lithium PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. Before we begin, I'd like to submit the following poll. And I'd like to hand you over to Daniel Fox-Davies. Good afternoon, sir.
Good afternoon, guys. Thank you very much, as always. Ignacio, good morning.
Good morning, Dan. How are you doing?
Fine. I'm in a slightly still wet and damp Dubai with quite an active morning of intercepts and some missiles this morning. I don't mind the bombing. I don't mind the rain. I do object to rain and bombing at the same time. I think they should just choose one between the two. But I am delighted and in very good spirits as I'm looking off towards the pricing here to see that the company has announced its PFS and published it out today. And so, as always, it's very good, and we appreciate your time to give some more color and some clarity and an opportunity to go through this in a little bit more depth than we're able to put in the RNS to explain actually what it means for investors and how it impacts from that. So, obviously, it's been a long time coming. You must be delighted to actually have it now in the public domain.
Yes, it's actually quite a milestone for us. The releasing of the results of the PFS is the most important technical milestone in the history of the company. We finally have the numbers on the project out there in the public domain, and we can start now. Now also with the CEOL having been announced with the Chilean government, meaningful conversations with potential strategic partners through the process that will be launching early after Easter. With all this data, concrete data from the project and the CEOL, the license to operate, we believe we're in a very good position to start these conversations with strategics going forward.
Just to give people an understanding, I mean, how big a document is this, and how many parties have been involved in bringing it together before we come on to actually going through the highlights?
Yeah, so the actual PFS, which is not what we published, we just published an abstract of highlights of the PFS in the RNS, is more than 400 pages long. We worked on it with several technical parties for more than a year. I think actually close to 2 years. We had the involvement of an engineering company, Worley. We had the involvement of the technical company providing the technology, Lanshen. We had also our CPs related to the hydrogeological model, which is like the mine plan for a lithium operation. And also we had our whole team working together with all of these specialists to bring this big, huge document together with data about location of the plants, facilities, infrastructure, mine plan, etc. So it's a quite comprehensive document, a very detailed that brings color on all of the aspects of the project from construction to mine closure.
And again, I would, just for the benefit of everybody, some time ago, Steve Kessler kindly, we did a webinar. We just went through the differences between a scoping study, a PFS, and a DFS. And PFSs can range in the amount of depth and detail that they go into. And this PFS, I know from conversations with you and the rest of the team, is a very, very comprehensive and robust PFS, which now gives us a solid data set. Because not only the 400 pages, there's a huge amount of other data that's generated those 400 pages from the consultants, which is now available to potential strategic partners to allow them to assess the asset and the project to move forward. But right, should we bring up the slides and just go through the highlights?
Please.
Okay. Right, take us through it, please.
Okay, so first of all, we have a 25-year mine life, which is pretty important. At the beginning, we had planned for 20, so 25 years is a great duration for a project. Our NPV pre and post tax, you can see it there. NPV8 of post tax is almost $960 million, with very attractive IRRs. The opex is another highlight, which is firmly sitting in the lowest quartile of the cost curve, less than $6 per kilo of lithium or 6,000 per ton. The capex, which is below $50,000 per ton in also weighted average, it is also sitting in a very good position comparing to peer companies. If you look at other projects bringing DLE to the market, we are sitting on the lower part of that comparison, and the payback for the whole project is just 4 years.
Fantastic. And obviously, when we come to financial analysts, we interviews there, but most of the interviews is an NPV8, so we're just shy of $1 billion NPV, and that's really. Now, obviously, the scoping study, we're originally targeting around about 20,000 tons a year, and many of the shareholders will address that and the OPEX numbers. I did mean to bring out the scoping study this morning, but do you just want to go over why we've moved from 20,000 tons to 15,000 tons a year, and how the rest of the numbers compare to the scoping study about 2 years ago?
Absolutely. So first of all, we have increased the mine life to 25 years, and that's a factor to consider. And then regarding the final production, 15 versus 20,000 tons, it is mainly due to the fact that we have reserves, enough reserves which are measured to justify this mine life. We believe with the acquisition of Minergy, you may remember in August last year, we did a raise and we acquired licenses that were to the east of the basin. With those licenses, we managed to increase the resource. But since we haven't done any exploration in the past few years, we cannot increase the reserves. We believe that with additional exploration in those areas, we could increase that 15,000 back to 20,000, but it is not something that we can do now without more exploration. But the resource is there. It's just we need to bring in more reserves, and that requires exploration. But there's a potential upside with the new licenses that we acquired back last year.
So just to sort of bring it back, because obviously our audience here and our shareholders range from those that must be a casual investor to those that do a lot of mining things. And obviously we're slightly different from mining here in that we're actually underground. So with the acquisition of the Minergy licenses last September, we significantly increased the land package on Laguna Verde, and that allowed us to book more resources.
Correct. Yes.
Okay, but in order to actually transition those resources to reserves, just as you would do with an oil project, we need to undertake further drilling. And based on the reserves we have at the moment, the technical consultants have scaled it back from the 20 to the 15 at this stage.
Yes, the reserves they need data, they need physical confirmation. So you need exploration in order to increase reserves. So we increased the resource last year, but we couldn't increase the reserves because we haven't done exploration. But we believe that's something that can happen in the future with additional drilling in the new areas that we have acquired.
Okay, so it's very similar to an oil and gas company having to go from a P3 to a P2 to a P1, whereas for a 1P, I always get confused on the oil and gas side as well. Okay, so we're currently at 15,000 as a robust number with what we believe is the potential to move back to a 20. How does the NPVs, I believe, are pretty similar to where we were. Let's deal with the OPEX first. The OPEX is, from memory, the same or slightly lower from the last time?
Yeah, a little bit higher. I imagine there's the inflation that you need to consider, but all the costs have gone up. So if you want to compare apples to apples, you would have to compare with real cost back in 2023
inflation,
with
that's right.
Real cost today, and we are still in the lowest quartile of cost. So actually, the OPEX is extremely attractive. And in general, all of these numbers, even with 15,000 tons, are extremely attractive, Dan. And if we can manage to get them back to 20,000 in production, they will be even better.
Yeah, no, that would make a huge number into. Now, I see here in the fine print, it's a little bit hard because it's the white on the blue, but with the CapEx, for those that can't necessarily see it on this, the brackets, it says that is including a 20% contingency in that number. So effectively, we're something closer to about a 600 just over, and then we've put in a 20% on top. So my understanding, correct me if I'm. I was going to say, at the PFS level, you have a 20% contingency, and then the DFS level, you'd move to a 10% contingency.
Yeah, I was going to say exactly that, Dan. That is pretty standard in a pre-feasibility study to include a 20% contingency. And as you move forward in the project to the definitive feasibility study, those contingencies begin to be reduced to, as you say, 10%. And also, just as a reminder, at some point when you're doing a PFS, you have to freeze the engineering and the design. And then you can revisit when you go to a DFS. At this moment, we have several ideas on how to improve the design of the project, but those will be taken into consideration for the DFS. So this is the picture that we took, let's say, a year ago of the project, and now with all the things, technology is constantly evolving, and also the project design brings new opportunities. So we are going to take consideration of all of those opportunities going forward to the DFS.
Okay, I think there's a couple of other good slides that I know that your team and Nick in particular put some effort to. I think it's worthwhile we maybe just to flip through some of them, and then we can get into the Q&A a little bit. So with the mine life here, so just to understand sort of how it builds up.
This is a DLE project ramp up. It is you don't start with 100% production because you have to tune in the equipment, so it takes some time. But it's a pretty shortened ramp up of six months, and then after the 6 months, you get to 100% production. That is the highlight here, and for 25 years of mine life.
Okay, understood from there. Let's do, before I turn in, and we can jump into some of them, but do you want to just quickly go through some of the other slides as we have them?
Yeah, let me show very quickly.
Yeah,
okay, sorry. Yeah, you move the slides down. This is just the cash flow for the project and cumulative cash flow. So everyone can see, of course, the first 2 years are the investment, the construction of the plant, and then you see how the cash keeps flowing every year steadily for the next 25 years or 23 years from the beginning. And on the right, you can see the same chart in a different manner, in a cumulative manner. And you see the capex versus cash flow versus sales.
Okay, thank you. And then,
like in this chart, we're showing everyone sensitivities. We use NPV8 as does the whole industry, but we're also showing how it would be valued with NPV 0 to 10. And the different IRRs, as we've highlighted, the pre-tax NPV is more than 1.3 billion with a 24% IRR, and post-tax is 960 almost with a 21.2% IRR. This is just more granularity on the numbers for everyone for anyone that wants to dig in and get more details. Okay. Here, here we see the locations on the left on the DLE plant, and then on the carbonation plant, and on the right you see the location vis-a-vis Chile. So if you take a look at the map on the right, you see that Copiapó, which is where we will be producing lithium carbonate, is very close to the ocean. Actually, there are a few ports there, Caldera and others, that can be used to export the product. But we have used for this PFS Puerto Angamos as the port where we'll bringing some of the raw materials that we need for the operation. And you see also that between the carbonation plant and the lithium chloride plant, there's only 300 or less than 300 kilometers of difference. So the idea at the project is to extract lithium from Laguna Verde, use DLE plus concentration of that eluate, and then send it to Copiapó in trucks to convert to lithium carbonate, which will be our final product. Do you have a question there, Dan?
I don't know. I'm just trying to take it all bit and the assets outline and the numbers. Okay. No, I think that's perfect, explanatory. And obviously, the PFS goes into some detail about the site, the power, the road, all the costs, the details, the construction. So this has all come together now for the numbers.
Yeah, it is worth highlighting again. First of all, Chile has a great infrastructure. The lithium chloride plant, the DLE site, is 1 or 2 kilometers away from the international highway, the 31 that you see there in the map that goes to Argentina. So we have a highway that connects our site to the carbonation plant. That is pretty unique for a project, especially if you compare to those in Argentina. And then the conversion facility, as I mentioned, is very close to the ocean, to the ports, which is another pro comparing to most other lithium projects out there. So that's what also helps supports the lowest. Here you see the actual site. If you take a look on the left, in green, you'll see the plant facilities. Actually, they will be covered from the highway by this hill. So if you are driving through the highway, you won't be seeing our plant. And all of the remaining infrastructure is wells. We have 36 wells considered for this project. Those wells, if you walk through, you might not even see them. They are just small wells that are 1 meter above the surface. The pumps are submerged in the, below the aquifer. So in general, it's a very low impact project. And one of our goals is to make it as lowest impact as possible. So we want to protect this site and actually put it in value as a touristic destination. And with preserving this precious environment, we want to add value and create an additional touristic destination or improve the facilities for people to actually go and visit this site, this location. We're not trying to hide the operation from people. On the contrary, our expectation would be that we will be adding value to the location, and more people will be going to see the laguna. This is electric. It's just more granularity on infrastructure. You see the substation, La Coipa is very well defined there in the map, and our project is not far away. So with our original design is to follow the highway from La Coipa to the project. So it's also it will be easy construction, not a lot of impact, as we will be using already a site that is industrial and that has a road. Regarding communities, I hope everyone knows and is aware of all the work that we have done to date with the indigenous communities. Not only have we engaged them very early, but also they are strong supporters of the project, which is pretty unique in Chile. We have agreements with the most important communities uh, from early development into production. Our CEOL also covers that relationship with the communities, and what also we want to support them going to production. So we will continue developing when we start developing the environmental impact study, which is something that should be coming soon. We will be working with them to collect the environmental baselines and to prepare the EIA, so there are no surprises, and they are continue as strong supporters of the project.
I know, yeah, a lot of time and effort has been put in. I think it's one of the things, actually, I think that when you look at the supply side of projects, particularly the ones in the US and some of the ones, there's one in Germany in particular that I can think of, I think they're going to struggle in some of their permitting on the timelines that they have. Because they don't seem to have engaged with the communities and the relationships that they have, or be in the countries. But anyway, that's just my speculation and partly talking my own book. Okay, well, we've talked about the CEOL just recently and how important that is. So, and again, I'm sort of doing this leading, but anybody serious that the company I know has spoken to in the last year to 18 months, in terms of our partners, and also the same thing in that any serious institutional investor that I've reached out to on behalf of the company has always been very much that we need to see the CEOL and we need to see the PFS. So you've obviously engaged the consultants in London in terms of bringing the joint venture party. So this will now go with them. Do you want to maybe just discuss a little bit so shareholders understand how that process will now work, now that Cutfield has the information they can put together for the data room?
Yes, and actually, we have a slide on that. It's thank you very much. So Dan, you are totally right. If you want to drive a process to find a strategic partner, you need some hard data to share with these companies, these parties, and that's why the first phase of this process can start now with Catfield Freeman. As you mentioned, they have their headquarters in London, but they have offices in Hong Kong, in Australia, and in North America. So they are very well positioned to look for interested parties all across the globe. Now, with the data from the PFS and with the CEOL announced, we are going to start this officially start the process. This will mean that we will be engaging a different set of potentially interested parties, parties that some of which have already approached us in the past, some of which have approached us just recently. We have been directing everyone to this process because we want to make it as competitive as possible. So now, as you see there, we'll be engaging with companies all across the value chain of lithium and in general in the industry, including financial institutions and trading houses. And from there, that phase should start actually now, tomorrow. And the second phase, which is Q2, Q3, is we'll send the teasers to all the parties, start revisiting, getting one-on-ones with every party, and provide access to our data room, including the access to the whole pre-feasibility study, the plus 400 pages document, all the documents on the company, on the CEOL, so they can take a look at it. And then the third phase will be receiving proposals and negotiations. We expect all of this larger project to last for 6 to 9 months, so we should be expecting a Q4, sorry, closure with the selection of the strategic partner that will be joining CleanTech at project level to develop the Laguna Verde project.
Okay, fantastic. And I know you guys have been working very hard with them and they put their preliminary deck of information. Okay, is there anything else, Ignacio, from the slides that you'd like to draw attention to? Otherwise, we'll come on to the Q&A shortly.
No, in general, it's for everyone. This is intended to give you just a small look, some color on the PFS. You can find much more information in the RNS. If you want to take your time, read through it, it's available in our webpage. So I encourage everyone to read it. And then if you want to compare with other companies to see how strong our project is in numbers, and I can tell you from the technical standpoint, we are also very advanced. It's not highlighted in this presentation, but Dan, I need to say how much work we've done on DLE, the pilot plant that we installed in Copiapó that supported, that helped us find the best resin, which is the specific agent that extracts lithium from the brine, that fits our brine. We have gone all the way, all the production through lithium carbonate in the US. So it's not only the PFS, it's all the data, the flow sheet, everything is very well described in the RNS. So I encourage everyone to go take a look at it. And now let's go to questions.
I would make that point as well, is that, this PFS is the result of several $1 million of times of consultants, but it is backed up by having the pilot plant. So some people will publish the PFS before they necessarily have the pilot plant, but by having the pilot plant, it gives us some more robust details into the PFS and more certainty. So all of these things now, and particularly the critical one was having the CEOL. Otherwise, quite frankly, there was nothing to have a conversation about with anybody. So the CEOL was critical, and the PFS is what I'd expected. It is not, it's solid. It's in line with what we've got. It doesn't set the market alive in the short term, but it provides us the ammunition and the data to now go into what is the most critical point, which is bringing in a strategic partner. And we'll talk about how that is in some of the questions. Right, I'm going to try and skim through and we'll put some of them together, but we'll read them out for the benefit of everybody. So Lance P, thank you always and for your ongoing support. He says that is congratulations. He's saying that the total take for the PFS is 375,000. Clearly there's scope for improvement. Going to the DFS. He was wondering if the company could speak to the total tonnage award in the CEOL and help to understand what potential valuation gap between what appears to be a rightful conservatively put out PFS tonnage and what the company may eventually be able to pull out over the longer horizon, after an improved understanding of LV's extractive potentiality, and also is there any scope, and this is again, you're coming to the boundaries of we increase the resource. What scope is there from further drilling to also increase the overall size of resource, or is that now constrained? I know we're going to shift from the resource to reserves with more drilling, but would for the further drilling give potential to increasing the resource either by having thicker aquifers in part, or would it allow us to extend into the limits of the licenses which we have, which may not be currently within the resource, or does the resource take us to the limit of the boundary of the licenses we have at the moment?
So it's a technical question, Dan, and I will answer with as much detail as I can with my knowledge. We have not drilled in a whole area of the salar, as you say, so we don't have geological information. As it is possible that with more drilling we can increase the size of the aquifer. We have more data about it. Maybe we find higher concentrations. So I think there are definitively there are opportunities to increase both resources and reserves, but it requires more drilling. Regarding the specific question asked by Lance, the CEOL doesn't give you a limited tonnage to produce. It will depend on the resource and then on the environmental evaluation, how much you can pump, and then therefore how much you can produce. But that's something that that stage is beginning. The environmental impact study preparation should begin shortly, because that will be the critical path forward through production with the DFS. So that is something that we're keeping into consideration. And as I mentioned, within that environmental impact study, we will be focusing heavily in protecting the environment and minimizing the impacts that our operation will have.
Okay, thank you. Well, we'll look forward to that. That's probably something to bring in after a partner. Just a bit of anyone, Ian G, thank you for your continued support and attending all of these. He just sends his congratulations. It's not a light of discovery, but this is, to be honest, I can't undersell how important it is in terms of opening up things for the next 6 months. It will really it will really be the backbone of all the serious negotiations and the technical studies that all the potential partners will do. And as the company has mentioned a number of times, there have been a number of parties in the data room, some well over 2 years, some of which have been down to site, been down to see the pilot plant, but all of whom, from their internal processes, needed the CEOL and the PFS. So it's really is. And again, we were delayed in the publishing of it due to not getting the CEOL, and then with the acquisition of the Minergy licenses last year, it all had to be updated. So it's a very laborious and complex process, and I know that not only you and Steve, but Gordon as well, and others have had to go through a lot of pages and reviews and internal process here to get us here. So Ian, thank you very much for that. Right, to Steve M, I'm going to try and combine. He's got 1, 2, 3. Steve, I'll see if I can put them together. So Steve's first question, Ignacio, was when he originally invested into CleanTech, we were sort of initially trying to a targeting for 2029. And now we're talking about this going out to 2031. I would caveat that by saying we also had hoped to have the CEOL 2 years ago. But his question is 31 just a placeholder? How realistic is that? And effectively, so we're now Q1, about to fall into Q2 2026. In the broadest terms, could you outline for the benefit of shareholders, potential partners, we're targeting a strategic partner by the year end. When would you expect the DFS to happen? When's the environmental process happen? When would you then start construction? What is the length of time for construction? I know we're talking about 15,000, but maybe we could talk about, is that one plant or is that 5 modular plants of 5 million? And do you bring on one and then the other and the third, etc.? So I think it would be very interesting for everybody just to have a bit of an understanding of how do we get from today to actually selling our first ton of lithium?
Yeah, sure, Dan. So all of those are great questions. What is what is limiting or what is, comes next from us for us from here to production? First of all, we need to begin the environmental impact study preparation. That is a 12-month process. It's 12 months because you have to do environmental baselines of 4 seasons. So it cannot be shorter than 12 months. It is pretty well regulated in Chile, so we want to start that as soon as possible. I believe that is the critical path forward to production. So starting, let's say we start this in a couple of months, we can submit by mid next year, and then there is a year to 18 months process of approval. So you're looking at a 2028, late 2028, let's say we get the environmental permits. In parallel, we will be working on the DFS, so it's ready before that approval. In parallel, as we mentioned, we will be starting next week with the strategic partner process. And we intend to finalize that by the end of the year. And so that brings FID to late 2028. And then it's onto construction, and that's how we get to 2031. I want to address the question of why dates change. It is pretty common in the mining industry because things happen. Because in this case, for example, we didn't get the CEOL because the PFS was delayed. Dates move a little bit, but as you get closer to FID, dates are start getting firmer. And also, again, differences, as you mentioned, than between a scoping study and a PFS. A scoping study is more of a desktop exercise that you do with data that you have available, publicly available from the industry, whereas a PFS is specific data gathered from your project in the site, drawing the lines, you drawing the transportation routes with quotations from third parties for raw materials. It is much more robust and detailed, and that's how you get to a lower percentage of uncertainty. Still, PFS, as you say, requires 20% contingency, and as you go to DFS, that reduces because you have more certainty. But in general, I would say 4,000 to 5,800 is broadly justified by inflation in the last 3 years. And you will see that if you see any chart from any of the pricing experts in lithium, you'll see that even the lowest cost assets in the world are now above $4.50, or $5. So we are in that quartile sitting steadily. And when you start looking at the PFS, you will notice, Dan, that we'll have one 15,000 metric ton plant and not modules, because the scale benefits has efficiencies, and therefore we will be building the whole plant in one sit instead of building in stages.
Okay, thank you. I would say on that comment, showing my age despite my youthful looks, when I first did my first gold project, I think it was Celtic Resources, I think it was the first gold thing in Russia, but I remember gold was probably like 500-600, but the all-in cash costs were like 200. Now, any mining company seeing gold, the all-in cash costs are ranging between anything between 600 and over 1,000 plus, with gold where it is. Projects and mines with a higher all-in sustaining cash costs are being put forward, but you wouldn't see anything at that sort of level again, and that's just a combination of wage inflation, fuel inflation, heavy metal inflation, cost construction. Is just part of the life, and we're 2 years down the line, so you've got at least probably 2 years of 10% inflation on the costings there that all comes around. Now
the same happens in copper. When I worked in a copper mine, cash cost was around $1.3. If you look now, cash cost is probably more than twice. It's above $3. So inflation, it hurts everyone. But again, if you are sitting in the lowest quartile of the cost curve, inflation also increases prices of your final product. So the best that you can do, you cannot cover for inflation, but what you can do is to make sure that you sit in the lowest quartile of the cost curve, and that is what will protect you from ups and downs and from inflation.
And just for people's benefit here, the quartiles. So, what would be the range within the lowest quartile? Where are we sitting within that?
I don't have the specific numbers, but if the lowest cost projects should be evaporation projects in Salar de Atacama and those should be around $4 or even higher. And
None
then,
of which there'll be no new ones going forward because of the environmental impact.
well, those are 30 years old. As I said,
Yeah.
the newest project there is SQM that started 30 years ago. So so the rest of the projects, if you look at the Lithium Americas of this world and others, they are with evaporation in the same range that we are with DLE, which should be in theory more expensive, but it is much more efficient. So it compensates the additional cost.
So it just moved across there. We're talking about the share price. So I've got a couple of questions here, and Ignacio, if I might just jump in, and Malcolm also is asking in Australia. So the company has always said that it would look to go back to the ASX at the earliest opportunity. I was just in Australia 4 weeks ago, where I don't think it would be inside of where I was catching up with a number of brokers, a number of analysts, and the legal advisors, just in terms of refreshing things. So the company's major shareholders are still Australian and Asian markets. There is still a pricing benefit on a pure comp basis to the Australian market. There are still many more DLE and overall lithium companies on the Australian market. There is a much broader and deeper investor base on the Australian market, and much wider analyst coverage on the Australian market. So we've had sort of delays there, but the board is certainly will be looking at all the options, and I think that's the most you could say. What needs to happen then for that to go forward? So one is we had Tommy, who did a great job before, actually, and I did some marketing with him. He's a fantastic individual, but obviously when we were put back, there was no point in maintaining an Australian NED at that time. The company would have to have an Australian resident director. Doesn't need to be an Australian individual, but it has to be somebody that's resident in an Australia. Maybe it does. I have to double check, but my understanding, it has to be a resident director to qualify. Then we spent a lot of time and energy on the emission document. So the key thing is that the financials all need to be updated. So they happen after the year end of the audit. The PFS would obviously need to go into an updated emission document. So that's now been done. The audit financials for year end would need to be done. And there's a few other bits and pieces. So those things would be happening in the background in order to update it. And I think realistically, if the company wants to move ahead with it, one could look to try and get that done in the summer. Certainly from the shareholders' point of view, that in Australia, they're very supportive. From a broking point of view, and as a relatively reasonable shareholder in the company, I'm very supportive. So it's under a constant thing, but I don't think we can technically say anything until we make an announcement or until the board puts out an announcement. So let's leave it for that at the moment, rather than putting Ignacio in the spot.
And then let me just briefly, and it's just a comment, but everyone can go and take a look. If you go and compare to our peers in Australia, like the Lake Resources of this world with similar projects, DLE, you can see the difference evaluation between CleanTech and them. And that, I think, that gives color to the point that you were making, Dan, about the knowledge, the broader knowledge in Australia on the lithium industry, on DLE, and that, of course, impacts in project valuation, in companies' valuation.
I mean, what historically happens with mining and oil and gas projects is you get your MPV, and then you're trading at a huge discount to your MPV the further you are from production. So at yesterday's closing price, I think was something around about 97% discount to the MPV8. Okay, on a fully diluted basis, including the cash that would come in from the various shareholder warrants. You would expect when you bring a strategic partner and you get some security and certainty about financing resources, that moves forward, and you may move to sort of round about 80% into the market. As you move then to the DFS, you'll end up at about a 50-60, and then you move closer until you end up closing, usually trading at something like a 15 or 20% to your NPV once you're actually in production, and then you start to move around much more in line with the commodity price. So as those move forward, they will happen, and as Ignacio just said, the Australian market much better. Okay, so look, wait and watch. But from my point of view, I'm planning on decamping to Australia for pretty much the month of May and early June, and we'll be spending time representing not only the firm but mostly CleanTech in terms of our relationships to the potential market there. Right. Okay, so we got the John A is asking, can we outline the plans, Ignacio, for copy opposed refinery plans for third-party companies? Do we have the capacity? Would there be anybody within economic distance to it that we might be able to get additional revenue?
Well, we have the land secured in Copiapó to grow the conversion facility. The PFS is for a 15,000 metric ton plant, and we would only change that in case we have firm commitments or agreements with other parties that want to use our facilities or that want to sell us more eluate for us to convert into lithium carbonate. But there is definitely an opportunity. We are the first comers, so the first company or the company that is closest to production in the region, but there are more projects. So it might make sense in the future to start conversations with those parties, see if they can, instead of building their own facilities, they can sell us the eluate. We would have more lithium carbonate production to sell to third parties, and they would reduce their capex. So I think it's a win-win situation. But at the moment, in today's PFS, the plant is purely focusing in our eluate coming from Laguna Verde.
Understood.
If you think in the future, the same site, in the future, the same site could host a second train, a third train, if we build, for example, in the future, Viento Andino, or if we bring eluate from third parties. So there is the capacity to grow that site.
And how, I should remember this, but I don't. It's a genuine question for my interest. Is that, so how big a site have we secured, and what sort of percentage would a 15,000 ton a year plant?
The plant today uses around 10% of the site.
Okay.
That's what's
So
in the PFS. So yes, it has growth potential.
Okay, now this, I know I'm putting you on the spot. I know conversations that neither you or most CEOs like this one is the how sustainable do you believe the price of 22,500 per ton for lithium carbonate to be?
Yeah, first of all, we don't forecast prices. Because prices are very volatile. What we do forecast and we can control is as I said, our production cost. If you are in the lowest quartile, you're always protected from ups and downs. And then we can also see demand and supply. And that should give you color on the price. We use for this assessment Canaccord's Genuity price estimation for the future, and also Benchmark Minerals market supply and demand. Everyone is saying, and you can read your own and have your own opinion, but everyone is saying, and I firmly believe this market in the future there won't be enough supply to meet future demand. If you see the projects, there's a pipeline of projects that are being assumed as coming into production in specific dates, but that's never the case, at least with lithium. Not all projects come online at when they were supposed to, with the production that they were supposed to. And second, demand is growing more than was initially forecasted because of energy storage, batteries for grids, etc. So there's another factor of growth, and then there's not enough projects in the stage where we are. So I believe that in the future, beyond 2030, we will be seeing a deficit of supply, and therefore our product will be highly valued. And therefore, you can draw your own conclusions on whether that price is sustainable or not. But I believe there would be a lot of attraction. Our product will bring a lot of attraction, and many people will be looking for it.
I mean, In fact, if we take a step back, why we all went into this and why I specifically went looking for a lithium project, and I think I've quoted before, I think it was Bill Gates wrote this wonderful line in his book, The Speed of Thought, that people have a habit of overestimating what will happen in 3 years and underestimating happen in 10. And the next 5 to 10 years will continue to be the increased use of batteries and battery technology. And the big one in all the reports is going around energy storage. So again, it's a problem with the wind farms. They need to be able to store it when they've got it, with solar. But it's not only just the EV market in cars, that's a significant part, but they're moving now to economies of scale to make the battery storage, which everybody wants. The other one is, so I still believe very much, and we're going to come on to a question here for Steve M about the battery market, but I still believe that lithium is very much the commodity to be in. And then within lithium, DLE is the way to go forward, in my opinion, rather than hard rock. Within that, Chile, I think, is one of the best jurisdictions to be in terms of a mining environment versus some of the other countries. And then particularly within Latin America, the free trade agreement with the US helps. So it's all very preliminary, but I think it's perfectly reasonable to say that I know, Ignacio, you've been having meetings with representatives from various US State Department and government bodies, and they're starting to have initial conversations about how they can help get involved in terms of securing supply. It's a very real issue that I think will be there for the next couple of years. And all of these things and these conversations can now start to be had in a meaningful way that we have the PFS. So it's really the sequence of events that come out of this. So as for the 22.5, what I would suggest, gentlemen, is I don't know if you ever see RK Equities. They're Rockstock channel. They're good guys. I've known them for about 15, 20 years now. They did some stuff with Steve. We're going to be doing something with them soon, but they've got a great guy there. He used to be with Battery Metals magazine, who's quite insightful. They've got a guy there from Asia who's really got a good handle on some of the lithium supply. And as Ignacio says, Ignacio was being very kind by saying not all projects start on time. In my experience, 9 out of 10 don't start on time for all sorts of reasons. And when you look at the supply-demand curve, there's a lot of assumption about new projects coming on board, not just ramping up from existing. It's reliant very much on new projects, Thacker Pass in the US, a few others. And I struggle to see a lot of these projects coming in on time, more from environmental issues in many cases than technical issues. And therefore, I think that the forecast for the supply side, the analysts have to take the data. So most of the supply sides, they take the data that's put out there. They don't necessarily go in and risk weight the individual mines coming on. They will just say, based on all these projects coming on stream, this is where we think demand will be and supply will be. So there's a lot of opportunity, I think, for the prices to go to the higher side. But we'll see. Quick one. Ignacio, what date will the environmental studies begin?
We have done some studies in the past. As Steve probably mentioned many times before, we did environmental baselines back in 2022. What we need to do is start revisiting those baselines, see what else we have to do in order to prepare the EIA and submit it. My plan is to restart that process as soon as possible, but we don't have a firm date at the moment.
Okay. Well, we'll give an update and we'll come back to that in due course if we may. We'll give a highlight. We'll certainly come back. Right, with the production waste, Steve was saying there seems to be a risk around battery technology changing dramatically in the next 5 years. I have my views. We could debate back and forth, but Ignacio, what is your views about the changing battery technologies and proposals?
What we've seen in the past few years is, first of all, a reduction in the total cost of lithium batteries. I was just looking at a chart from a decade ago or so. Price has gone down 90%. But also batteries are being built more efficiently, and there are companies further improving the total capacity and energy density of lithium batteries. So lithium is the best metal to build batteries, and they are getting more efficient and cheaper. So it will be very difficult to replace. I think there's a space in some specific equipments, power tools maybe, where sodium-ion batteries could be supplementing lithium. But all in all, I think given the deficit that we're seeing in the market for the future, that is helpful, and it will allow lithium to be focused on higher density batteries, which um, will will be the core of transportation and energy storage. So all in all, I don't think lithium can be replaced, and not definitely not by 2030, not even in 10 or 15 years. So I would be calm with that, and I think lithium batteries have still a lot of growth and improvement, and they will definitely solid state batteries, solid separators, replacing electrolytes. There's a lot that can be done on the technical level and is being done by Asian and European companies to improve that. And I think we'll see more of that in the future.
If I may, from my understanding, because I mean, even if there's nothing there that's really come out so far. I mean, there's some benchmark ones, but getting batteries to work at industrial scale is very different from having technologies that work in a lab. Secondly, you can't just replace a lithium battery with other sort of battery. The power output and stuff means that it would be very difficult to swap it into existing products. The investment that you have and the investment that people are making into existing battery chains, unless there was unbelievably cost advantages that you want to go out and then respend the billions and billions and billions of dollars. I'm sure there will be other technologies that will come over the next, 15, 20, 25 years, and they will start to be, 1, 2, 3, 4%, or they may end up being a part of it. But it will take a significant amount of time for that to come through. So I don't think it would be an impact in terms of our project, in terms of going live and they're having a commitment, and it's not like they would go away overnight. I think it was Sony that came up with the first LPF battery in something like 84 or something.
LFP, yes.
In the Sony, in the LFP battery that they did. A great book called Volt, which actually Gordon put me onto, which is well worth a read, talking about the electrical revolution and how it came about. Right. So next, moving on. Same question actually from both Steve M and sorry, we combined it and put it through. Sorry, there was another person that asked from Tim A. Will we be publishing the PFS document in full to the public? Is it a public document?
No, it's not a public document. It will be available to parties under NDA, and especially specifically for the process that will begin with Catfield Freeman. What we have released is a summary or the executive summary or highlights of the PFS that will be available for everyone, not only shareholders, in our webpage. It's already available. But
okay, thank you. And Tim's also asking, the main factors onto contributing to the OPEX, or basically, what are the main factors? Why are we in the bottom quartile? What is good about our project that allows us to be in the bottom quartile, which might, and I'm suggesting here that Tim's might be asking, is what's to stop a bunch of other people coming in and having projects in Chile in the bottom quartile?
First of all, you need a resource. No, but in particular, we have chosen a technology that is very efficient. The carousels, the DLE carousels, are simple. That makes it cheaper. And then it's a standardized process. So the flow sheet that we have, everything that we use is mostly off-the-shelf equipment that is put in a way that helps it being very efficient. And then our eluate comes to be very, very clean, very pure. So the conversion step is not that significant vis-a-vis evaporation projects, which have much more impurities in the eluates. So they have to go through a lot of purification processes. And then we have the infrastructure, the highway. We don't have to build a road. We are close to a substation. It's not a 400-kilometer power line. So infrastructure also really helps the project be efficient.
Noted. Thank you. Okay. Any further question that we please add them on for that one. Right, Steve. I do like Steve. He likes to write a lot of good questions here. So Steve mentioned a big chunk of the cost seems to be electric. We all agreed. Would it make sense at any point to consider putting in our own solar farm?
The PFS considers a power line to supply 100% of the energy. We have done studies with third parties regarding having solar farms, and we'll continue those into the DFS. That's all I'm going to say. But there are possibilities, as I said, from the PFS to the DFS to make the project more efficient.
But it's also a lot of the electricity in Chile. It already comes from renewable sources, so it's as you say, a large part of it is the energy consumption. So one of the things we do have attractive power in terms of some of the other projects around the world that one's looking at. But again, as Ignacio just said, that would come out as the DFS and furthermore. Right, Steve M again is coming up. Any update on the CEOL finalization date? And just want to remind people what's required.
Yeah. So well, as we have publicly said, the CEOL has been approved by the ministry, and then the process is it goes to the controller's office to get the rubber stamp. That is usually an 8 to 10 week process. Since we entered March 10, it means we should be looking at getting the controller's approval by the second half of May, and then it's just signing the contract with the government. So I hope before the end of May we'll have that signed.
Before the end of May. Okay,
That's
thank you very much.
Expectation with the 8 to 10 week process.
Okay, now working through it. So Crispy has come up on any comment on Metals One share sale. He was saying it makes no sense unless there's a problem somewhere. I think there is a problem. I think the problem potentially is in Metal One share price. Ignacio, shall I just answer this so you can be diplomatic? Obviously, it's disappointing that they use liquidity and used to sell out. I saw on some chat room, I try and avoid the chat rooms because they just infuriate or something there, but it's the same way I try and tell my ex-wife not to take news about the bombing in the Middle East from Twitter. But there was something where I was saying that we had told them that would make no sense, that it would be not in our advantages, and there's no relationship between anybody and Metals One. So that was an absurd one. But Metals One came in at 5p. They were there when we needed the money to get the Minergy licenses, which unlocked the sale and allowed to move forward. You hope that people will stay on the register for as long as forward, but everybody has the right to sell. So they were at 5. They got out of the mid-teens, so they made 130 odd percent. They sold at 9, so almost 100%. Now, if you look at them as a company, and I called them yesterday at the close and I was somewhat disappointed that they didn't give a heads up, because we could have tried to maybe find a cross-seller. But when they invested in CleanTech, their share price was 4.5p. I know they're looking at new projects. I know they're looking to get cash. They're trading today at 1.8p. So they're down, roughly 65%. So they had a market cap, hold me 1 second. Where are we? Right. So they've got their market cap of 21. I'm not sure what their cash is, but by doing this, it's given them another 2 and a bit million cash back. All the company would tell me is they're looking at products and they were looking to raise cash. So they are happy investors. They are there to invest in companies. They're a public company. They're there to raise money for their shareholders too, just as we're trying to do for our shareholders. They saw an opportunity with the liquidity. Are we wild about it? No, but they're out now. It's their prerogative. Everybody has the right to sell. Everybody has the right to go and do it forward. It's a bit of a pain, but the share price will sort itself out on the results. So I'm really not that fussed so much. As I was saying earlier, the PFS and the CEOL allows us to revisit things such as all the partners, but significantly it allows me to go out to new investors. One of the things about these webinars is when we look at the attendance, we're mostly, it's existing shareholders, these forums. And when I try to go to new people, you know, they always say, well, I want to see the CEOL, I want to see the PFS, I want to see what the numbers are. So Ignacio and I are about to start on a virtual, but you know, non-deal. We're going back to a lot of the institutions, including several people who are on the register who made money, who sold out earlier on, who may be looking at lithium. I've been looking at some of the institutions that are on the register of some of our peer groups, Lake Resources, Galan, many of whom are in Europe. I'm going to be attending the Zurich conference in the Denver. So the Denver Gold Conference in Zurich, which is a stupid way to have it, in my opinion. But anyway, it's a good conference of European investors. Galan will be there, Lake, looking at those people, just to raise the awareness of people. And those institutions, you know, many of whom will buy or market, but they want to sit down. They want to sit down with Ignacio. They want to look at the publicly put out RNS today. They want to read it. These are not firms that just buy on speculation. As you say, the current UK market is not in the most optimistic of moods, which is why I think the ASX would do much better for us. I think the whole UK environment is a little bit down. So people have talked about we're not having a huge rally. We got a great rally on the CEOL. It got clobbered. It happens. This is a really strategic achievement for the company. And a really, really important milestone in terms of now being able to go for the next couple of months and continue to go marketing. We've been very limited, as I say. So I think those things will address the share price, but it's not going to happen in 24 or 48 hours. It will happen with ongoing awareness campaigns and marketing. And I know that Ignacio is doing a lot of other IR work because we've now got something fundamental we can go and tell the world.
Yeah. Just like when we talk about the lithium price, it's all about fundamentals. And for CleanTech, the fundamentals are all right. We have the PFS out with the information on the value of the project. We have the CEOL, which is what will allow us to produce lithium in Chile. Let me remind everyone, we will be the first or one of the first companies to receive a CEOL to produce lithium in Chile. There are only 2 companies producing here. We could be the third because of all the work that we have done. We are closer to production than anyone else. We have the PFS. We have done environmental work. We'll start the environmental studies. So the fundamentals are all right, and that will take care of the long term. That's my view. We don't care about the short term. Let's look long. The project is very attractive, and it is going to be producing in late 2030, 2031, and that's what will increase the value of the company. Anyways.
And also, I mean, the PFS now allows Canaccord put out a brief note. We always said after the PFS that we would be putting out a reinitiation note. That will happen imminently. Early one morning, I was some just final proofing of the numbers because again, the analysts only get sort of crossed within a shorter period of time. But so that only gives us, you know, some proper materials to then go out. And now we're also on the back of the PFS, we'll be updating the company's sort of generic company presentation. And you'll see us get back in doing work with not only the usual ones of the Vox and the Armchair and a few others in terms of trying to reach out. But specifically, I'm looking to go to the US, Canadian, European, and Asian investors that are into our peer groups that are already on the ASX and just saying, look, we think this is a fantastic opportunity to get involved with the company. And if the company then makes a commitment to the ASX, this is where you're going to get a re-rating as well. So there's a lot for myself and as much time as Ignacio can spare me to go and do. But we've really been hamstrung until today. Stuart asked a question about the raise and the positions and the comment disappointing. Stuart, I hope that sort of covers it off. If you want to add anything further, please add a fresh question at the end. But the PFS we were excited by the technical, by the sort of what we could do with the industry and research and getting out to institutional. not what I think the retail was going to necessarily do on the day. Right. In Canada, they legally have to release the full feasibility study. I didn't know that. Is it something special that you're showing in the data room, or is there anything could be released in the full time? Just because AIM's a bad market. Yeah. So what's Ignacio? I mean, I don't know that about Canada, so I'm going to take George's word on that. But what's the thinking? I mean, obviously, you don't really want to put it out to parties. As I imagine, there's data there in the plan that you might not want to share.
Oh, the thing is, Dan, that we're following. There are two major reporting regulations. One is NI 43-101, and the second one is JORC. Since we have seen, we had planned to list in Australia, and we may revisit that. We have done all of our PFS under JORC regulation, and that if you look at the RNS, it will be evident. So, and that really doesn't require the whole PFS. It's more than 400 pages long. So what we're releasing is more than enough information to be there out in the public domain.
Yeah. I suppose the point is, although it's, I think, interesting, I think from a commercial point of view, it doesn't really benefit you to publish. It's not a legal requirement. And unless you're under NDA, there's no specific strategic advantage for CleanTech for making it a public document. So I don't think it benefits. I mean, I understand it would be nice from a shareholder point of view, but from an industry point of view, you wouldn't necessarily want to be bearing everything to everybody. Right. So Tim was asking about, Tim H here is asking, is the strategic partner expected to fund all the CapEx and the OPEX going forward? Or will there be capital calls? I'll touch on what might be you'd have to do to meet the listing requirements in Australia. But do you just want to talk about strategic partner and what the company would hope for?
Yeah, so the process, first of all, is going to be at, or the partnership will be at project level. So we protect our shareholders from the head company, from the listed company, and that project will need to be funded both with equity and debt by both partners at the time that comes. But we are looking for a partner that has the capacity to undertake debt to finance the project mainly. So what we want to, it will be, of course, in the end decided. We will see different offers and we'll see which one is the best for the company. But in all cases, it will be done at project level and looking for a strong partner that can deliver both equity and debt finance for the construction.
But just to be very clear, so that's at the project level. So they come in as a partner at the project level of what we're going to do, remove. There's no anticipated one, although if the company was to pick up other projects in the region, that may be at a top go level. But again, that's all things to look at next year. And from a capital point, if we go on the ASX, there is a minimum number of shareholders you have to go out with and a minimum package. So there's some debate. It's 350 or 300 you have to have on the register with a minimum, I think, of 2,500 Aussie dollars. It was two. Some of the existing shareholders will count, some won't. So that's something that needs to be reviewed. But upon an ASX listing, you would need to bring in some capital to put onto the ASX register because they're not fully fungible. You'd need stock in Australia to provide their full liquidity. But the general principle is that a strategic partner will come in and fund. And it may even be possible that the company can negotiate getting some back costs back. On oil deals, you can usually get them to contribute something towards what's been spent in the PFS. But all of these things will be for Ignacio, for Steve, Gordon and Dermot to sort of sit there with the various partners and with Cupfield. Right. What percentage of the aquifer remains unassessed based on the newer Minergy licenses?
Worm Energy amounted for around 30-something% of the polygon, so it is not insignificant.
Okay. And that's an assessment. Once we bring in a partner and you get a budget, we'll look at further exploration in. Okay. Ben, why great work with this. Could you put some color on the rationale for a full carbonate plant? There was a consideration for selling LICL first and then move to LICO, similar to what SQM in the early days, and now in line with the likes of Galan.
Yeah, so the market has changed since SQM started their production 30 years ago. Lithium carbonate seems to be the most attractive compound or lithium compound for investors. If you analyze versus hydroxide or chloride is an intermediate product, and it has a discount over carbonate. So carbonate, we believe, is the product that will continue to be mainstream for most companies looking to produce batteries, and that's where we want to be, because the battery industry is what's going to really drive and is driving as has driven the growth in demand for lithium products.
Okay, and Nick, we're trying to answer everything. I mean, people can leave. They've got a last like 4 or 5 questions, but I think they're very good questions. So we're going to try and get through them and the opportunity here while we have Ignacio's time. But I will try and speed up. E&D, what's the necessity to split the 2 processing plants?
It's more efficient. The lithium carbonate plant in Copiapó requires raw materials that otherwise would need to be trucked up into the mountains. It is much better. We have also, it's closer to the city where we don't need a camp. We can have more skilled labor. So it makes all the sense to split the plants. And it's exactly what SQM and Albemarle do today in Salar de Atacama. So it's nothing new.
On that one.
But
it's just purely the economics. It was run on the PFS. I mean, it will get revisited on the DFS, but that's just the way the numbers came out. Okay, Wayne H., can you describe the planned further testing of DLE and what goals does CleanTech expect to achieve? How many further meters of drilling are anticipated at what cost? I think that's specifically around Laguna Verde. Does CEOL have a detailed resource level project management plan such that a realistic timeline exists for the project to move to an operational state with no further timeline slippage?
So in general, we have done DLE testing. We have selected for the PFS the technology, and we intend to do a little bit more testing in the future. We'll keep you informed about those updates, those processes. The management plan is always there. As Dan said, 9 out of 10 projects are usually late. So what we want to do is have or what we have actually is a timeline with all the critical dates that we need to comply in order to be ready by the date that we committed, and we are doing our best to honor that. Of course, that requires more work, the environmental impact study that we will begin soon. So we'll also keep you updated on any news that we have on that front.
Thank you very much. George C. Tapping US, we did try an OTC listing, George. It was probably too early days. We've got there. I mean, the only way it really works, if you really want the US liquidities, you have to go to NASDAQ. It's a $1 or $2 million exercise. And actually, the US government money doesn't require you to be NASDAQ listed. I've seen them fund a number of Australian and London listed companies where they got critical metals in Africa and other parts of the world in terms of putting soft money in. And given our assets in Chile. So their concern is more about strategic supply, but they've become much broader. It wouldn't be a prerequisite around the US government money to be on a US exchange. Same question, George asking, is the share price too low? You've got to be at 20 cents Australian. We'll be out marketing on the back of this. 3 days ago, it was. If for any reason at the time, what you do is you do a share here, one unit in Australia, because they're not actually listing shares, you're listing a unit which is then underpinned by an underlying share held in the registry. So you can just do a 1 for 2. So you end up trading it twice the price on the FX way, but it doesn't prohibit in the listing. But I very much hope on the back of what we're going to be doing over the next month to 2 months in anticipation that we would see the share price get back into the low to mid-teens. David L, do you need to raise money for the environment? Oh, by the way, I forgot to say congratulations on getting the million and bit quid back from the government. So well done on that. Always helpful, and I know that significantly improves the company's cash position because we've got very limited burn at the moment. Do you need to raise funds for the environmental study, Ignacio?
So with the, as you said, with the money that we have received from the IRS, we can do some studies, and then we plan to to do the bulk of the studies once we have engaged our strategic partner to make sure that they are also aligned with the process and with the technology. So that's why we have done. Some things are waiting until we have selected the partner too.
Noted. Thank you. And Ian, so only question. At the moment, if I can, I'll just jump in for Ignacio for you. It's 15. Ian was asking, is the plant a single nameplate of 15,000? How could be upgraded? It's a single plant. If we were to do further drilling between now and then, and the economics made sense to go back to 20, and the resources moved to reserves, you could come back and make it a nameplate 20. And I think that's part of the process between the PFS and the DFS. And then last, Chris was asking, is Metals One out? Yes, they are fully out of the company. I believe they sold to a market maker who sold most on market and then has got rid of the rest of it, I think, yesterday evening and this morning. So they are now out of the company, and they were approximately 10%. So again, it's resetting the average entry price for the whole shareholder base, which, I'm always happy just to see the volume. We're 200 million out. Again, 0.5% to 1% every single day is really quite respectable, and I'm very happy with those numbers that keep going. So yeah, they're out. Ignacio, is there so thank you very much. Thank you. We ran on longer than we thought, but I thought there were some excellent questions come in, and we very much appreciate the opportunity and the time here, not only to give people color on the PFS, but to delve into these other areas. And I know that I certainly, and a lot of other people, appreciate the company's attempts to engage with its more general shareholder base and answer this. Is there anything else that you think we should add on?
And first, it's always a pleasure to do this IMCs with you and to try to answer all the questions from our shareholders. It takes time, but thank you everyone for attending. It's great to see your support and your continued interest. The company is, I said the first quarter would be very exciting, and that we would have the CEOL and the PFS out before the end of the quarter. We committed, we fulfilled our promise. It's out there. Now, the real exciting times can begin, starting to look for a strategic partner in a great market environment. Broader, you see the demand is very strong. Geopolitically, it's very exciting too, from the perspective that we bring supply from Chile. Free trade agreements are in place with most countries and regions. And so this year will be definitely very interesting for the company. This process, the EIA, potentially, as you said, Dan, looking into listing in Australia, and then by the end of the year, announcing the partner that we selected to join us in the development of the Laguna Verde project. Everything is mounting up to make it the best year in our history. So be confident. I know everyone wants to look at their investment. I do. Every 5 minutes or 6 times every hour. But look at the fundamentals, and the fundamentals for this company and for the Laguna Verde project are very strong, and we'll continue to get a lot of interest from third parties, and we'll be keeping you updated of any developments that we have in the near future.
As always, thank you very much. I'm sorry I ran it on. We're gonna do our very best, and I'm sorry we may probably only just talking to ourselves now. The next one, we will keep it to an hour. As always, thank you very much, and we'll hand back to IMC.
Thank you both for your presentation this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback, which will help the company better understand your views and expectations. On behalf of the management team of CleanTech Lithium PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.